to the very first edition of Morning Trade with Moneycontrol. I'm Karunya Rao, and in the next half an hour, I'll help you get all set for the trading day. The big stocks in focus, well, market moving news and trends, expert views and picks to help you navigate the street right ahead of market open. And most importantly, your queries will be addressed during the course of the show. So guys, keep commenting on our YouTube live feed, and if you're watching this on Facebook or Twitter, you can send us your questions there too in the comment section. So keep texting, keep sending us your comments and your queries all through the next half hour. We'll have them addressed during the course of the show. So let's get started with what's in store today. Well, lots to watch out for. As far as the Wall Street is concerned, stocks plunged on Friday, with the Dow suffering its worst one-day loss since the throes of the pandemic, as the latest draft of corporate earnings and the prospect of rising rates spurred a wave of selling. Europe's handover was also weak, so we're not working with the best of cues as far as global setup is concerned. The last street is expected to open in the red as trends on the SGX Nifty indicate a gap down open. The last time I checked, SGX was down about 260 points. Stocks across Asia are also in the red, and we saw the last street last week as well end on a weak note, settling lower for the entire week gone by. Significant news flow also came by over the weekend. So which stocks will be in focus? First up, there's ICICI Bank. Solid numbers for Q4 FY22. Asset quality has also shown good improvement. There's Reliance Industries, Future Retail, which will also be in focus after minority creditors voted against the deal. So big setback coming in for Future Retail. PVR, Voltas, Quest Corp, Indoco Remedies, these will be the stocks that could hog a fair amount of limelight on the back of fund actions. Some earnings candidates to watch out for today will be Tatva Chintan Pharma, Century Textiles, Make Money, Fine Chem, among several others. So we'll address all of these stocks from a trading standpoint, and we'll get you to know how they're looking on the charts, and not just that. We will also put the spotlight on the IT sector, as it's the first one to conclude the earnings, and get you a deep dive analysis of the sector and what's brewing as far as the entire IT pack is concerned, whether it's the bellwether, the heavyweight companies, or the mid and small cap IT players. So let's get started and welcome in my guest on the show, Gautam Shah from Goldlocks Premium Research. Gautam, thank you so much for joining in this morning and on the very first episode of Morning Trade.
Thank you, Karunya. Thank you for having me.
Before we deep dive into individual stocks and how they're playing out, Gautam, I want to know, how are you reading into the charts for the benchmark indices? Gap down open expected?
Well, yes, gap down open obviously expected given the kind of move that you saw in the US on Friday. But actually, if you really look at it, the market is behaving like a pendulum. You know, it's been the case for the last month and a half. When it does well, it takes out all levels on the upside, and when it starts to correct, you know, it doesn't respect any support level. So that's really been the trend. I think it's been a very stock-specific market. The Nifty is unlikely to see significant damage from here, I think, despite the gap down start that we're going to see today morning. And I think the important support that I would be watching very closely today and for the rest of this week is 16,850, because that's the number where a lot of technical studies kick in and provide support. So if 16,850 stays safe, I think then the chances of a rebound back to the recent highs of about 17,400 will remain. But if that number were to break, then you could see some more near-term downside. And let's not forget, this market has been in consolidation mode since October 2021. You know, we've broadly been in the 16,000, 18,000 kind of a band. This is consolidation after the 2-year rally that we saw, you know, on the indices, which was spectacular by all means. So I think this is healthy consolidation, and I think anything around 16,500, 800 is a good risk reward buy from a market's perspective. So don't give too much importance to these day-to-day moves. I think the risk reward is getting better, and over the medium term, I do believe that the markets will trend up once again.
You know, we've just started the show and a lot of comments have already started trickling in, Gautam. What will be an important support for Nifty? This is a question that a couple of our viewers are already trying to understand. So if you could tell us if there is a level or a range that you will closely be watching out for, and they should also keep on their radar.
Yes, so I just spoke about it. I'm pretty sure that everybody is wanting to know, you know, where this current fall could could find support, and that is 16,850. Now, why this level is important is because this is a level where the 200-day exponential moving average of the market is. This is also the level which happens to be the 50% retracement of the entire rise that we saw in the month of March. And if you also go back and study the data of the last 3 months, you will see a lot of hits around this level of 16,850. So I'm banking on this number, and how the market behaves around this number, I think might just decide the trend ahead.
What about Bank Nifty? How are you reading into the chart of the banking index and overall as a sector or as some individual stocks perhaps that you would like to flag off for us?
See, the Bank Nifty lacks leadership. And when you have the big boy like HDFC Bank going through such a difficult period, you cannot have the Bank Nifty do well, despite the excellent earnings that ICICI Bank came up with. And I'm sure that will provide some support, not just to the Bank Nifty, but to the overall market. But still, I think the Bank Nifty is under pressure, and I think it could see further downside. It could be the reason why the Nifty corrects a little more from here. And my working number on the downside is 35,400. I think we could be testing this number in the next couple of days. And if this were to break, you might want to be prepared for even numbers as low as 34,000. So if you are in the Bank Nifty, stay with the outperformers. I think we've been advocating ICICI Bank and SBI for a very, very long time. These two remain our best picks from a medium-term perspective. Short-term, there are no trading strategies on the long side, so it's best avoided.
Okay, all right. In fact, since we're talking about banks, let me fire away the first stock in focus, which is ICICI Bank that we will be talking about. Important earnings candidate, second largest lender of our country. So lots of eyes on ICICI Bank today. They've reported a 59% YOY jump in the profit, coming in at 7,019 crore rupees. NII has also grew by a handsome 21% year on year, coming in at 12,600 odd crores. But talk to us about how ICICI Bank is poised, because just 3 days ago, you were talking about the weakness of HDFC Bank. So just 3 days ago, we saw ICICI Bank topping its rival HDFC in valuation multiple for the first time ever. So clearly there is a lot of strength, lot of resilience coming by as far as ICICI is concerned. But on a technical level, is that resilience likely to continue? How will it fare today and in the coming days, according to you?
Well, I think the resilience is going to stay. I think this outperformance has been here for the last 12 to 15 months. It's only now in the last 3 months that the market is starting to realize that. And let's not forget, strong stocks do not correct big. I think this is something that we've seen in the last couple of years. SDFC twins, particularly SDFC Bank, witnessed that big one-day wonder, which was the talking point around the merger. But thereafter, look at the price action. It's just been so weak. And, people were saying that, okay, maybe SDFC Bank has covered its underperformance. But in the last 10 days, it's all gone away. And coming back to ICICI Bank, I think it's been rock steady. And I think the earnings is only going to help it. It remains a part of our model portfolio. And I will recommend your viewers to, top up their position in ICICI Bank on any small dip. I think this is a stock that will go on to make new lifetime highs, probably the first banking stock that will see new lifetime highs sometime in the next few months. So we remain very, very positive on it. And if you actually look at the relative strength chart, which means ICICI Bank divided by SDFC Bank, you will notice that it remains in an uptrend. So I think this is a big shift that we've seen in the last 15 months. And it's come after almost a period of 7 to 8 years. So it's going to stay. ICICI Bank and SBI is going to outperform every other banking stock in the market in today's times.
Okay, well, we know what your view is on ICICI Bank, but one of our viewers is asking us about Axis Bank. Rohit Gupta has asked us a question right now. And since we're talking about banks, how is Axis Bank looking right now?
Well, Axis Bank has been a trading stock. It goes up with the market, comes off with the market, hasn't been as resilient as a SBI or an ICICI Bank. And in a weak Bank Nifty environment, I do not want to trade Axis Bank on the long side. I'm still positive on it on the medium-term perspective. So on dips, maybe you can look to accumulate for the medium term. But short term, I don't think there is a trade and it should be avoided.
Okay. All right. Well, let's move right ahead and talk about the other stocks in focus and a heavyweight and a small cap name which will be collectively hogging the limelight, Reliance Industries and Future Retail. Now, what essentially happened is that the deal has been called off. It was supposed to be a $3.4 billion deal to take over the retail assets of Future Retail by Reliance Industries. Now, they said this deal cannot be implemented because the company's secured creditors have voted against the scheme. That essentially is what is stated in the press release that was uploaded by Reliance Industries. So definitely a lot of interest will be there, and Gautam, future companies have been witnessing a lot of trading in the last many months, or actually more than a year really. So before we talk about those, if you could tell us how's Reliance looking on the charts. Last week, definitely a stellar performance seen on the stock price, but will it continue?
Yes, I think it will continue. I think Reliance is the reason why the Nifty got to levels of 17,400 recently, and it really triggered the entire recovery from lower levels. It remains a part of our model portfolio. It is one of the best ways to play the India story. I think Reliance and Bharti, I think we've said this many times in the past, and anything, that leads the market is always a stock, that has great visibility from a medium-term standpoint. So while it might be a little overbought for the short term because the rally was sharp and almost vertical, so we saw a level of 2750, 2800 where there is some resistance. There could be some pullback towards 2550, 2600. I think that will be an opportunity to buy. But eventually, as investors, I think we should be positioned for 3000 and beyond. So Reliance, I think, is a story that I'm clearly very kicked about. Future Retail, something which I've not looked at for a very long time. It doesn't move with the market. It's been an underperformer all along. I'm not surprised that the stock is not excited, and traders and investors should stay away from it.
Okay. What about future group of companies? Do you track them? Do you have any view on how, people should look at it and whether or not they should try and trade in any of these stocks, or should they just completely avoid?
Completely avoid. I think the easy money making phase is gone. Till last year, you could buy anything and make money out of it. It need not have great technicals or fundamentals, but we've now come to a point at a level of 17,000, 18,000 index where it's just stock quality that is doing well. And any stock or any segment of the market that doesn't move with the index, is a question mark for me. And Future Retail, if you really look at it, if I'm not wrong, it's at a 52-week low. So, these are not stocks where one should indulge in bottom fishing. Stick to quality. I think that's how your portfolio is going to be safe in 2022.
Right. Okay. Makes sense. Before we talk about the next big stock in focus, essentially from a consumer angle, I want to understand, and rather our viewers also want to understand, what will happen to the, to the FMCG players, because Shubham Shukla has written to us, from the 28th of April, palm oil exports will be banned. What will be the effect on FMCG companies? Which are the stocks that you should, look at? Of course, we are not here to discuss the fundamentals. We are just here to deliver news and cues and then look at it from a chart and technical standpoint. So, Gautam, any of these FMCG players that look interesting at the current juncture, or even otherwise, if there are any red flags that you foresee and if you want to alert our viewers about it?
Well, the FMCG space has been in underperformance mode for almost 6 months. It witnessed a near 20-25% fall from its previous high. But having said that, I think the fall was a little overdone. Everybody just gave up on FMCG stocks because, everything in the market did well, but FMCG just languished in a range. And we've seen the likes of Nestle and HUL, the Maricos and the Colgates and the Daburs of the world just languishing in a range and underperforming. But the two stocks, that I'm very kicked about and I've spoken about it on, various platforms is United Spirits and ITC. ITC obviously is a, highly talked about name. It's seen a fabulous run from 200 to 260, still looking good for more. I think it is under-owned. Valuations are still under control. Institutional interest is excellent. And I think it's recovering from its underperforming phase. So I see ITC getting past 300 eventually. That's been my stance for the last 6 to 8 months. And United Spirits, according to me, is the story of the next 1 to 3 years. So if you have to play FMCG slightly longer term, then ITC and United Spirits would be the best bet. And even some other names like an HUL might be bottoming out, and there could be a small trading opportunity there.
Okay, we're getting a lot of questions on IT sector and IT stocks as well. Mohammad Asif is asking us on IT sector, Tech Mahindra View. Then there is Ravi Pratap who's asking us on Tata Elxsi. In fact, I think I saw a question on Infosys as well earlier on in the show from Akhilesh Mukati. So any of these IT names, Gautam, that you want to recommend or that you think could potentially do well in the next few months?
Well, I think the tailwind that the IT sector was enjoying, I think that's not there anymore. And now the market does not like disappointment. So even if the results are average, the market doesn't like it. And that's what has happened with the earnings season. I think chartically it has underperformed. But let's not forget the bigger picture. IT has been one of the standout performers of the last 15 to 18 months. And because the rise was so large, the room for correction or consolidation is equally large. So don't rush into buying into IT stocks. I don't see any signs of bottoming out at this point. There could be more near-term weakness. They're already down quite a bit. I do understand that. But you want to buy relative strength in this market. So IT is a complete avoid for me. I would want to see some positives on the screen before I can commit into. But if at all you have to get into IT, I would still stick to the top names. And my preference would be Wipro and TCS. I think they are much better plays than many other stocks in the market.
Well, Gautam, I have a colleague with me who may not agree with your views. She tracks IT sector very closely. Madhuchanda Day from MC Pro joins us now just to get a sense of what's happening in the IT sector. Of course, we will come back to Gautam and continue with the stock analysis as well from a technical standpoint, but time to bring Madhu on board. Hi, Madhu. Good morning and welcome to the first episode of Morning Trade with Moneycontrol.
Thank you very much.
Well, would you conclude that IT results were a tad disappointing this time around? Gautam is a bit wary about IT names across the board, barring a couple of which he pointed out. But what is your verdict?
Yeah, I couldn't agree more that, the disappointment was also because IT had seen such a huge rally from the bottom. If you look at the IT stocks from the bottom of March 2020, the rally was phenomenal, and that was on the back of unprecedented demand that the sector saw. I mean, 6-7 years demand crunched into 2-3 years. So yeah, it was a confluence of a lot of factors. But turning to the Q4 earnings, I would clearly say it was a mixed bag. It was not all out disappointing, but yeah, there were pockets of disappointment. Revenue disappointment was there from some of the players. And what was uniform across the board was the margin picture. And that came on the back of the continued supply side challenges. So overall, it was a tepid set of numbers given where the valuation was and where the expectations were.
So is it perhaps a time to then decisively move out of IT? Would you say that?
I wouldn't completely agree with that kind of a view, especially from a fundamental and a long-term perspective. I think some of the tailwinds we need to keep in mind while in this quarter, and some of the management kind of confessed that this was not the best quarter in terms of their execution and margin pressure. But what was clearly coming out from all the management commentary was the strength of the demand. Albeit the challenges with respect to inflation, the macro challenges, the geopolitical tension, one thing was very clear, that has not impacted demand so far. All the companies alluded to very, very strong order book, pipeline at their lifetime highs, etc. So I think given the strength of the demand, I think execution will pick up. And, the margin pressure would perhaps wane somewhere down the line. So I wouldn't really write off IT sector at all.
So let's say if one wants to add IT, how should they go about it?
The IT sector has corrected quite a bit. In fact, the index has fallen by a little over 15% in the last 3 months, and some of the stocks have corrected lot more. I think quarterly earnings give you a good check on what to buy and what not to buy. There are certain large cap names where, the order book has been very, very good. Order addition has been good. We have recommended some of the stocks. For instance, I also strongly feel that Infosys has corrected quite a bit. And, it is in a correction mode. So I wouldn't recommend that you add everything in one go, but you should gradually add, in the large cap space. I would only recommend stocks where the results have come out and we have a clear understanding of where the, next couple of quarters are going. So yeah, you should add on decline stocks like HCL Tech, which is very undemanding in terms of valuation. A stock like Infosys, which is corrected and which is still correcting, and definitely on the mid cap side, although their valuation is still a little heady, but because they're expected to report much superior earnings, somewhere in the mid-20s CAGR for the next couple of years. And I think selectively you should look at mid-cap IT stocks as well, but don't buy in one go. I fully agree with that view, but you should have your shopping list clearly ready and start accumulating on decline.
Okay, Madhu, thanks much for joining in and giving us a detailed picture of how IT sector played out in Q4 and how it's likely to perform going forward as well. Great chatting with you as always. Let's shift gears, get back to Gautam Shah. He's here still with us to talk technicals. Gautam, the next stock I'd like to flag off is PVR. There's been some bulk deal action as far as this stock is concerned, and definitely it has been getting a fair amount of limelight as well. So apart from the fact that BlackRock has bought about 37,600 shares in the company, their share has now risen to slightly more than 5% in the company. Let's talk about how it looks on the charts, because last 1.5 months it's been largely range bound. Is that going to be the trend going forward in the foreseeable future as well? Will it be range bound, or can investors and traders perhaps look at lapping it up at the present level?
Well, I don't think these are levels where you can really lap it up. I think the risk reward is not justified. It's in the kind of business, which it's surviving in a very unpredictable world. When COVID third wave hit us, that was a time when PVR pretty much bottomed out. And thereafter, we saw that rise from 1,200, 1,300 levels all the way to 1,800. And now, again, we are talking about these variants and what's happening in Europe and the cases in Delhi. So these are always factors, which are risks for such businesses because they are easily and, impacted very fast. So I'm not a big fan of PVR. I think if somebody is long for investments, yes, you can hold on to it to play the story, but no fresh longs here. But one stock, which I have been recommending for the last 6 to 8 months very aggressively is Indian Hotels. Same industry, pretty much a part of the unlock trade, great brand, great business, did nothing for a decade, and it's now come out of a very large range, and I see this doing very well. We've recommended it to our subscribers at Goldlocks for a very long time now, and I believe that this is one stock that you could concentrate on for the next 3 to 5 years, and it's not as sensitive to the developments in global or geopolitical space as a PVR or an Inox and some of the other stocks.
Okay, all right. Well, we have some more minutes, so we'll address some viewer queries once again. Gautam, a lot of people want to ask you questions today. So power stocks definitely in focus. They have been doing well in the recent past as well. We have a question from Rick Wood. He's asking the power sector stocks have been performing phenomenally good. What's your perspective about the sector? How are the prospects looking like?
See, the prospects are great if you have a 12-month, 24-month or a 5-year view. I think there is still a lot more juice on the upside. But if you ask me at current prices, can I go out there and buy? I think the answer would be no, because they've all run up. I think it's become a crowded trade. We've all seen what has happened to an Adani Power and what's happened to a Tata Power and a CSC. Many of these stocks have, have seen stellar gains, and they are looking a little overheated at this point of time. This is not a market where you should be chasing stories. So I would say just hold on for the long term, wait for dips to get in. I think the longer term story will play out, but short term, there are no indications. But one other, theme that we've liked and we've discussed many times in the past is fertilizer. Still looks very, very solid on the charts. A lot of very good setups out there. Any small dip in the market, I think fertilizer is a good space to get in.
Okay. Lot of queries coming in on oil and gas stocks. There's Akash Kukreja, Sanjay who's asking us as well. Any of the names within oil and gas, whether it's OMCs, whether it's any of these city gas distribution companies, any of it that has caught your attention?
OMCs look like a trading idea. I think sometime back we covered Indian Oil Corporation as well as a trading idea. So I'm not looking at it medium term. But because you talk about oil and gas, I must just broaden it a little bit. I like the entire PSU basket. I think the entire PSU basket is coming out of many years of underperformance, and there could be a massive breakout coming in on the PSU index above 4,500. And if that were to happen, I think the PSU stocks will really stand out because they are under-owned. They offer great dividend yield. They offer great safety at these prices, and they're great businesses. And there's a lot coming from the government. So if you really broaden the entire spectrum, I think PSU is a theme that we like, which might include defense stocks like a BEL, some of the OMCs, the NTPCs, the NMDCs of the world. All of it, I feel, offer great medium-term opportunity. And in today's 17,000 index, I think it offers a lot of margin of safety.
Okay. We have quick 1 minute to also address one last query for the day on M&M. Devendra Thakur has been writing to us, quite a few comments by him on M&M. So if you could quickly share your verdict on that.
See, auto seems to be coming out of a period of underperformance. I thought the last week's move was very positive. And it seems some of the auto stocks will start doing well again. But then you have to be very selective because within the space, there are stocks which are doing well and there are stocks which are just not doing well, like, the Hero Motors of the world. But M&M and Bajaj Auto, I think, are the two stocks where we would be positive on, including Tata Motors, which I think is a medium-term opportunity. So yes, use dips to buy in and stay invested. I think these stocks will, start doing well from here.
Okay. All right. Guys, we're running out of time. Thank you so much, Gautam, for addressing so many queries, questions, and trends for the market and for our viewers. Lot of queries and comments still trickling in, guys. I'm very sorry, we're really pressed on time, but please tune in again tomorrow at 8:30 a.m. It's a daily show, Monday to Friday, on all the market days. We'll come back. We'll address all the top news, cues, and stocks to watch out for, and of course, address your queries. With that, I'll wrap up the very first and very special edition of Morning Trade with Moneycontrol. Thank you for tuning in. Stay tuned. Markets with Santo and CJ coming right up.